another thing that I'd like to touch on is there's also an article on my website called "Unlocking the Money Matrix: The Summer's Gold Price Suppression Scheme," and in this article I basically talk about gold, and we just quoted a few numbers like the Treasury market, $12 trillion, the U.S. GDP, $15 trillion, but what most Americans have no clue about is that the gold market is actually the world's smallest major financial market. And in 2007, on the London Gold Exchange alone, over $20 trillion, 20 trillion with a T, so it was larger than the U.S. GDP, it was larger than the Treasury market in 1 year in 2007, traded on that exchange. And so what I'm trying to say is, like, us, the common people, we don't use gold, right? I mean, no one's walking around buying stuff with gold these days. But on the world market, it's being traded all the time. And it can be used, like if a nation is buying military goods from another, I mean, think about it, like, the U.S., we just sold, and this is actually true, one of the things that my competitor, Congressman Dent, proved was, I think it was another $2 billion of military aid to the nation of Israel. And when that happens, what are you going to do? Like, you give them, just this paper, and in this case, I'm not quite sure exactly how they do it, but in a lot of cases, like, okay, if you're a central bank of a nation, you want to buy some stuff, well, just print up, hit a button on a computer, here's some electrons, here you go. But, what a lot of people do, a lot of large corporations and rich folks and nations do is they trade in gold. And they use these markets to move goods around because there is trust in this asset. All central banks on the planet hold gold. Why do they hold gold? Because it's money. It's money. It's never stopped being money. It's been removed from usage by the common people as currency, but it's always been money. So anyways, in the article, what I go through is the case for, and, it is a case, I think it's actually pretty airtight, that the central banks have been colluding to suppress the price of gold. And what I also point out is, a lot of folks haven't heard of the London Gold Pool, but the London Gold Pool from 1961 to 68, when it collapsed, that's a whole story unto its own, but to make a long story short, the central banks were secretly colluding, and you can read their minutes, because that's what I did in this article. Like, if you Google London Gold Pool, my article should come up within the first 2 pages or so. But if you read that article, it has links to actually central bank meeting minutes with page references, and you can go in and read all these guys, and, it's basically a bunch of central bankers talking like, oh, we need to hide this from the press, and, oh my gosh, the gold market is collapsing, we can't keep it under control anymore. And that's exactly what happened. So the market collapsed in 1968. Things went into, we were trying to do a 2-tiered price of gold for a few years, and then, Nixon closed the gold window in 1971. So these things do fail. There is prior historical precedence for it, and the case is very, very strong. I mean, Alan Greenspan said, I forget the exact quote, but it was like, where central banks stand ready to lease gold in increasing amounts should the price rise. It's something like that. And
they were
he said that,
ready to release it.
Yeah, he said that in like 1998, and what's real interesting is all these things with the real rate of interest and everything, they all play out. And so in the article, I don't ask anyone to believe the article, but at the end I've got all this large amount of proof at the bottom that goes through in a lot of detail how the futures markets work, how they trade gold and silver, because, it's not quite as simple as, walking into a store and buying stuff. It's traded on futures exchanges to determine its price. And I believe, and there's other groups that believe this, it's not just myself, GATA, the Gold Antitrust Action Committee, and if you go to a site called lemetropole.com, L-E, then Metro, and Pole, P-O-L-E, .com, there's a fellow there, Bill Murphy, that writes about this stuff, all the time. And people can
there's a few people out there that write about it. There's a whole lot of literature out there on it. And I mean, if somebody's interested in researching the gold market, GATA is a great place to start. And they have done a fabulous job at chronicling what they surmise as intervention in the market. They lay out a pretty convincing case. If you look at the market itself, it's pretty hard to imagine that it's not manipulated. I've also heard some pretty solid arguments about, from people that, laying out cases of how, trying to prove that it's not manipulated, and both sides can make a pretty strong case, but, the reality is the market doesn't smell right. If you follow the gold market at all for very long, you'll quickly realize that it just doesn't smell right, just like a lot of these markets right now.
Yeah, and the GATA site is gata.org. And one of the interesting things is, I probably knew about GATA for close to 6 months before I was just like, this stuff is correct, and that was back in 2008, in late 2008. And since then, it's just been like more and more proof just piling on. So, people can go to these websites and they can check them out. I obviously recommend my article on my website, and what's in there is kind of nice. Is you have, it's from my perspective, but you've got a summary of things. And one of the things that I point out that's so important for people to understand is that when you trade any of these commodities, and I guess a commodity is basically like a uniform good, like wheat or corn or grains of rice or iron or what have you. Right, and with most of these, or even like pot bellies from pigs, and really with most of these commodities, what you find is you have about a year of production to match about a year of stock. So what that means is, you've got about, people are trading futures or trading amounts of about a year, and what they have above ground stock at the moment is about a year. Now, with silver, which is also a form of money, like we covered earlier, we were talking about silver dimes, it's about a year and a half. So it's about the same, and silver is actually an industrial metal. But when you get to gold, there's something very fishy about gold. And the thing that's fishy about gold is nobody throws it away. It's always saved somewhere. So
and you can't destroy it. It's indestructible, really. I mean, if you use it in production, it just ends up back in the earth somewhere. It doesn't go away.
That is correct. But on silver, we'll get to that in a second. With gold, it's about 60 to 80 years of production is in the above ground stock. So there's 60 to 80 years of basically gold sitting around, and the amount of production of gold is going down every year, slowly but steadily going down. So it's becoming basically a more and more stable form of money, because that's what money is.
And even in the height of when that was why gold was always seen as a great money, because there was always a problem with fiat currency, but gold production never really exceeded a growth of more than 2% a year, and I believe it's down to like 1.25% a year right now, something like that. It might have fallen negative recently or something. But that was always one of the looked at benefits of using it as a currency, is that it couldn't be grown and manipulated like you can with a paper.
Right, and you had mentioned that gold isn't all that consumed. There's actually some amounts of gold that is consumed. Like I actually worked in the semiconductor as an engineer for a while, and on a lot of these devices that you make, you have like gold wire bonds. So you use little bits of gold to go from the circuit board onto the top of the microchips. But the amount of gold that's actually used by the whole semiconductor industry as a whole is very insignificant in comparison to the amount mined each year and also to the total gold stock in the world. But with silver, like silver in the earth is about roughly 8 times more prevalent. Like there's about 5 billion ounces of gold, a little bit over 5 billion